Welcome back to our weekly newsletter on the economy, where we bring you the latest updates on business and economic trends. Today, I will take you on a journey through this week's newsletter. To receive our weekly newsletter and stay informed on the latest economic developments, simply follow our website in the description below. Our first news. Last year, the EU housed a whopping 31 million enterprises. Interestingly, micro and small businesses employed nearly half of the workforce, generating a massive 3.3 trillion euros in value added. Even more surprising, despite being only 8% of enterprises, the industry took the lead with a whopping 33% turnover share. And next, the IMF highlights the positive impact of rising wages on Europe's recovery. However, there is a call for improved productivity and the tight macroeconomic policies to curb inflation risks. Varying wage growth across countries and labor supply challenges due to demographic shifts and shorter working weeks are among the concerns. The IMF urges policymakers to balance recovery efforts with inflation control and calls for structural reforms to boost productivity. And now we are going to Bulgaria. Slow growth marked Bulgaria's retail sector in September. Notable was a 3.3% surge in fuel sales, while food, beverages, and non-food products saw slight declines. Now, Sweden held a steady course in October with the CPI inflation rate holding firm at 6.5%, while the CPIF settled at 4.2%. Next, we want to Germany. It experienced a drastic drop in aluminium production in the third quarter of 2021, witnessing nearly a 50% decline in primary production and 8% reduction in the production of semi-finished products. Going down, Saudi Arabia is gearing up to be a key player in the electric vehicle market, with plans to produce 500,000 electric vehicles (EVs) by 2030. The country is focusing on EV battery production, hydrogen-powered vehicles, renewable energy, and attracting global investment. In November, the University of Michigan reported a dip in the U.S. consumer sentiment to a 6-month low, with the index dropping to 60.4 from October's 63.8. Economists had expected a slightly higher decline to 63.7. Now going Japan. October 2023 saw Japan's producer prices rise by 0.8% year-on-year, marking the lowest inflation since February 2021. Last year, the EU witnessed a 9% uptick in rare earth element imports, reaching 18,000 tons, while exports decreased by 8% to 7,000 tons. The import value surged by 37%, led by China, contributing 40% of total imports. Now going to China, it experienced a 13.8% year-on-year increase in vehicle sales, hitting 2.85 million units in October. Auto shows promotions and new model launches fueled this continued growth. From January to September 2023, Germany's clothing imports saw a significant 14.1% decrease, amounting to 27.8 billion euros. Major contributors were China, Bangladesh, and Turkey, with China leading with a 21.2% share. And now going to the euro area. In the third quarter, Eurostat revealed 0.1% GDP decrease in the euro area, contrasting with stable figures in the EU. This followed a 0.2% growth in the euro area in the second quarter. October saw a 12.9% decline in business tendency in Poland, impacting the manufacturing and construction sectors the most. Again, the IMF suggests that Japan's economy could significantly benefit from increased female participation in STEM fields, potentially boosting productivity growth. Despite demographic challenges, Japan's GDP per capita growth was impressive during the Abenomics era. And now discuss the steel market in the EU. Forecasts predict a 5.2% decline in apparent steel consumption, with a projected recovery of 7.6% in 2024. The steel industry faces uncertainties amid economic challenges but shows resilience in specific sectors. October witnessed a decline of 58,000 vacancies in the UK labour market, contracting with a 7.7% annual growth in regular pay. Labour disputes, particularly in health and education sectors, led to 229,000 lost working days. Business conditions slightly improved in October, but confidence declined in Australia, especially in sectors like mining, wholesale, and manufacturing. Despite high capacity utilization, signs of a slowdown in inflation are evident. Now, the OECD unemployment rate remained steady at 4.8% in September, staying below 5% since July 2022. While it rose in 16 OECD countries, it remained unchanged in 11 and declined in 6, with an overall increase in the number of unemployed persons. Now going Lithuania. Over a month, prices for goods imported from the euro area and non-euro area showed significant increases, led by crude petroleum. In September, Croatia saw a 5.1% increase in manufacturing and a 7.6% surge in electricity and gas supply, despite a 1.6% decrease in yearly figures. British inflation decreased more than anticipated in October, offering relief to policymakers as annual consumer price inflation dropped to 4.6%, its lowest in 2 years. Turkey experienced a remarkable 64.1% annual rise in the total turnover index across trade, services, construction, and industrial sectors in September. And about the S&P Global Growth Insights, emerging markets slow while developed ones contract. Steel prices remain steady amidst weakening demand. Sticky prices persist despite softened demand, impacting business confidence globally. Now let's look at Big Tech review. AI-led recovery boosted cloud computing and digital advertising for tech giants. Hardware sales face pressure as consumers delayed upgrades. External factors like geopolitical tensions pose risks for their 2024 outlook. The IMF emphasizes tourism as a crucial driver of global economic recovery. Despite ongoing pandemic and geopolitical impacts, projections indicate a potential return to 80 to 95% of pre-pandemic tourism levels by year-end. And lastly, we're going to Czech Republic. Industrial producer prices in the Czech Republic fell by 0.1% month-on-month, but rose by 0.2% year-on-year. That wraps up our economy newsletter for today. We covered a wide range of topics. Stay informed and tuned in for more economic news in our upcoming episodes. Thank you for watching and remember to subscribe to our channel for the latest updates.